weekly trading review from the 6th of April to the 9th of April. In this video, I'm going to talk about the weekly trading review, overview of the entire week, what I'm ashamed of this week, and what I'm proud of this week of the trades that I've taken, and also technical issues. Right. So, weekly trading results. I traded on Monday, Tuesday, and I didn't trade the rest of the week because it was not needed, and I wasn't um, that active in the market on Wednesday and Thursday, to be honest with you. So I didn't trade, and I didn't have the need for for me to trade. So I didn't force myself to enter into the market. And Fridays I'm not trading. So this entire week, Monday, Tuesday was the 2 days that I was sitting next to the market actively checking the chart. So Wednesday, there was also a trade that I didn't take. Um, I saw the setup, I sent it to the community, but didn't take the trade. To be completely honest with you, I just looked at TradingView. I didn't check I wasn't inside of the broker. So on Monday, I took a trade, beautiful trade that gave me a risk reward of 1 to 4.3. Great risk also. Um, Last week I was in a 4% drawdown. So because I'm in a 4% drawdown and I'm counting my starting balance from the from that week, the important thing is to stop the bleeding, as they say, to not risking more. So in this trade, I could have risked 1%, right? And I could have gained 4.3% in gain, and I will be back at break even, right? That's the how much am I willing to get, how much can I gain mindset that kicks in. But that's not correct from my perspective. We should always be thinking, how much am I willing to lose? Like it feels like I'm a broken record. I'm saying this over again. So I could have risked 1% and gained 4.3%, but I could have lost 0.5% and be 4.5% in drawdown, even more. That's what we do when we're saying, I'm saying stop the bleeding or cut the bleeding. So that's why I'm risking 0.5% until I reach my starting balance, and then I can have some buffer to be able to risk more. I'm not using my losses as buffer to gain more from the market. It doesn't work that way. That's how the equity curve goes like, where's the whiteboard? That's how the equity curve goes like this. Let me risk more and then you fail. And then let me risk more and then you fail. And like it's so hard to break out of these holes. You have to dig yourself up and it takes a while. That's why when people say, I'm not, it's maybe good to work a 9 to 5. Why? Because when these times happen, you're not getting paid each month, maybe. You have a buffer, basically, from uh, that pays you something. So you're not getting paid each month because you can be in a break even 1 month and you're not getting anything that month. That's the trade. And Tuesday I took a 0.5% risk on the trade, and this is the trade that I was ashamed of, and there was also technical issues because I took a 0.5% risk, put my stop loss, and and because of the lagginess of the broker, which I'm so disappointed in, uh, it stopped me out at 0.75 just because of the technical issues of the broker. But end of the week, I ended the week green, 1.4%. So this might not seem like a lot of you, and I'm trying to instill the reality of trading here inside of this community, and I'm going to use a shout out to Juva Pitya for this because he uh, Mart blew an account and Juva answered him with a PDF file, and this PDF file is a must read, and there is so much value in this, and I really recommend that you read it, and thanks to Juva for writing this. This is based on how he trades prop firms. All right. And one of the things that stuck out to me was base hits are calculated from the size of your real salary. All right. So what is your real salary? Let's say on the day you get around 150 to $200 based on you're working a 9 to 5, 8 to 4:30 in the country you live in. Not what Twitter traders call good. So you could be making 1,000 a day. That's fine. That's gold. That's good, but that's not the goal, right? Because the target you have should be calculated from your reference point of what you got from your salary, because it changes your perspective of it. So having a 1.5, let's say I'm rounding it up, percent a week, that is my goal basically. That's my base hit, right? Everything under that is not good. I need to improve something. Something need to change. There's something's happening. I need to be objective of what's happening. I'm checking the journals, checking the trades I'm taking, checking the risk, everything to get myself aligned inside of trading. Trading, you have to have walls, and here you can be reckless inside of these walls. Just like Juvvas is saying in this document is so good, professionally made. Because if your target is 3 to 700 per day, calculated from what a good day's pay would be like based on your regular salary. We are all, or most of us, are trying to escape the 9 to 5 and be able to make money from trading. And it's different because if you're making 150 to $200 a day from trading and you're trading from 9 to 11, isn't that enough, really? We're trying to make it way too big because we get so diluted from the social media platforms and the way people are trading. I don't want to digress with this because I have I have the ability to do that. So the trade I took on Monday, let me just go through it quickly. This was a 1 minute model trade. Basically, the trend was bullish. It swept liquidity here on the, I believe, on the 15 minute. I can't really remember. Swept liquidity on the 15 minute, broke structure to the upside, and then it tapped into the fair value gap right here. And even this, this is I should have noticed this. I took my I took a limit order, put it on the 50% mark of this trade. Right. It took the trade right here. In this scenario, I should have noticed that the broker was lagging because it gave me a better entry. So when it gives me that's when it gives me a better entry, we don't question it, right? But when it gives you a bad entry and takes out more of your risk, then we question it. And I took my profit from the break of structure that was about to happen in this area right here, but it didn't happen. So because of the 10 o'clock candle closed on the 1 hour, that's when I closed the trade. Because what usually happens is we have higher highs and higher lows, right? This is a higher high on the 1 hour that's been created, and it's most likely to create a higher low on the 1 hour for it to go down. And I didn't want to be stuck in this area for a while. Excuse me. So I took the entire trade right here. And 4.3 is a beautiful trade to take. So Tuesday on the DAX, this is what I'm ashamed of on the DAX. So this is a 1 minute model trade. Swept liquidity, broke structure, entered the fair value gap right here. And the thing that I didn't do is I should have taken a partial profit here on the 5 minute fair value gap. There's a 5 minute fair value gap right here in this area, and I should have taken my first take profit here and returned my stop loss to break even so I don't so I take some position, some profit, and then I let the rest of it get stopped out at break even. But I didn't do that, and that is why what I'm ashamed of. So this is what happened with the technical issues. So I took a 0.5% risk, and because it was lagging, it took almost the stopped out the trade right here because of this candle spike also. So the 0.5% turned to a 0.75% risk. So this is one of the subjects. Technical issues is when people go from not knowing trading to directly going into trading live, you will lose money based on technical issues because you don't know how the platform is working. You don't know if it's lagging or not. You don't know what's correct or not. It's like we need to take baby steps on the demo account just to figure out the technical things with the prop firms, with the payouts, with the MT5 or MT4, with everything related to the technical things that we need to do on when we trade. So technical issues will occur, and this is, if I look back at my journal, this is what usually like runs me up a wall. When there's technical issues happening, I block myself out directly. After that, if I notice that there's a technical issue happening, I just want it to work. And because I want it to work, I get so agitated and into my emotions that I like to revenge trade almost based on the technical issues that happens. That's why I'm using two brokers because some broker lags, especially when there is a monthly shift or there's a new release and the updates haven't been done. They're only on the beta version. This is what usually happens. So I hope you learned from this something. And if you enjoyed this weekly review video, feel free to follow me on YouTube and follow me on Instagram. And by the way, I just wrote an article. Feel free to read it on Medium talking about trading does not have to be complicated. So I wrote this article and I'm sharing a short story about it and I'm sharing my story and I'm sharing how trading needs to be simplified and that the gurus on social media are making it too hard. And it's like they're playing it's an act when I look at it. It's crazy. But feel free to read it on Medium. I'm gonna put it on in the description below and have a great weekend. Have a great Friday and a great weekend. Take care.